I'm the markets editor at the FT, and this is going to be a 50-minute session. It's a leaders panel, and we can talk about whatever we want. But we thought we would talk about basically what happens when worlds collide and when crypto reaches established finance and when established finance reaches into crypto. I have an excellent panel to discuss this with me, and there will be time for Q&A at the end. So just to introduce everybody, we have Nicola White, who's come all the way from the States. She's US President of B2C2. Thank you so much for coming over. We have Tyrer, who's head of Fidelity Digital Assets in Europe, and we have Mathew McDermott, who is the global head of digital assets at Goldman Sachs. So just to kick off, I'm going to ask everyone to introduce themselves and the firms that they work for a little bit. I don't think Goldman Sachs needs that much introduction as an organization, but why don't you tell us a bit about what Goldman does in digital assets broadly?
So I guess there's quite a few things that Goldman Sachs do in digital assets. I mean, I took over kind of the business a couple of years ago, and at the time, there was probably kind of quite a narrow focus. And over the last 2 years, we've really broadened kind of the areas that we're really kind of pushing forward on. And in that interim period, the team has doubled kind of tenfold. We also now have kind of a real big infrastructure, you know, with kind of dedicated lawyers, compliance officers, and really that's a function of the commercial opportunity that we see, you know, across the market. And, you know, in terms of what do, we have a crypto kind of business, which probably isn't as exciting as the two of these, but that's where we do as much as we can. So it's classic, it's kind of trading. We've started to do a little bit of lending. Content's a big kind of area of focus for us. And my business kind of I sit within the global markets, which is the markets part of the business, but I actually have responsibility across wealth management, asset management, and so we're also kind of building out kind of what we can offer our clients, you know, in those two kind of divisions as well. And so I would say kind of everything we do in that space is driven by client demand. And so, you know, kind of cash settled derivatives. I think I saw Tim earlier, you know, we did an options trade, which was the first kind of time we dipped our toes into cash settled crypto options. And, you know, that certainly kind of caught a lot of column inches. And for me, that was quite defining in a way, although I was surprised by the media, this was the first time that we were able to offer our clients the ability to trade the volatility rather than just thinking about kind of being one directional. And so that was kind of, you know, a big kind of seminal moment, I think, for us as an institution. And then on the other side of kind of the client-facing business, we also kind of spend an awful lot of time really kind of working with clients who've kind of gone through that kind of exploratory kind of what is crypto to thinking about the underlying technology and seeing how they can really apply that to their businesses. And this can be asset managers, hedge funds to a degree, kind of insurers, pension funds, and there we're looking at kind of how we can digitize financial products. So, you know, classic, we did debt instrument last year with a couple of other banks. You know, we've been mandated on several others. First will be the first of their type. We're also looking at tokenizing many different real assets, which I think the underlying technology is going to be hugely powerful for in terms of creating efficiencies, and also digitizing derivatives and really kind of exploring what we can do in the commodity space. So, you know, there's an awful lot that we do that's driven by clients. Yep. And then without boring people to tears, the other bit that I'd say we focus on is investing in companies. And I think as we want to kind of expedite, you know, kind of what we're focused on, you know, in the crypto digital asset space, our ability to actually use the firm's capital or even clients via our growth equity business is very powerful, because there's many things that we can't do for regulatory reasons, which we'll come on to, but having that ability to invest in companies to allow us to at least kind of accelerate our understanding, thinking, is very powerful.
Yeah, thanks for that. It's the whole 9 yards, right?
Yeah, exam's done, so yeah, I'm going to have a drink now.
So Nicola, for anyone in the audience who's not super familiar, tell us about what B2C2 does.
Sure. So B2C2 is a OTC liquidity provider. So what that means is, you know, we're making markets to our institutional client base on a daily basis in products from spot crypto to options to NDFs, lending, and CFDs. So really trying to span the gamut, make sure that we're making the market accessible for traditional finance players, but then also servicing our crypto native client base as well. We're 100% institutional, so you know, really focused on adding what I will say is like the level of service that you see in traditional finance into the crypto space. So it's something we focus a lot on. How do our clients get access to, you know, large amounts of liquidity in, you know, a fairly organized way, such that, you know, there's not severe market impact.
Yeah, exactly. Chris, Fidelity is one of the most prominent buy-side firms in the crypto space. Getting a lot of riffraff from the you can pipe down in the bar area. But you're one of the more kind of prominent buy-side firms in the crypto space. What kind of offerings do you have?
Sure. So there's really two pillars to the business. The first is what I would describe as basic prime services. So that's custody, trade execution. We have a tripartite collateral agency offering other clients utilize for a number of different things. And then the second part of the business, but that first part really just sort of basic prime services. The second side of the business is the asset management side that we stood up in late 2020. And there we provide investment products available to a broad array of potential investors. So we have a private fund that tracks the price of Bitcoin in the US. It's available to US accredited investors. We filed an S1 with the SEC to launch a physical Bitcoin ETF. As we know, the SEC isn't terribly fond of those applications at this point in time.
Got some reservations.
But we're operationally ready to launch that as and when that stance changes. And then we're starting to look at what the next generation of products is. So looking at both active and passive products.
Yeah. So, I'll stick with you if I may. Like, what is it like when a big grown-up asset management firm, suited and booted, gets into crypto? Is there a clash of cultures?
I wouldn't say there's a clash of cultures. I mean, we've positioned our business really to cater to institutional. So, certainly on the prime side, we only interface with an institutional client base. And so that really, we are an institution ourselves. And really, like when you look back at why this business came about, and Fidelity has been researching the space for a very long time. So we have a research unit called the Fidelity Center of Applied Technology. And that really is a research group where we explore interesting emerging tech. And importantly, this isn't necessarily with a view to applying this technology into the various businesses within Fidelity. It's just to keep abreast of interesting tech. So we have a quantum computing unit, an AI unit, and back in 2015, a blockchain unit was instantiated. And so we've been mining Bitcoin since 2015. We've been mining Bitcoin consistently since then. And really, the genesis of Fidelity Digital Assets came out of a requirement to custody our own assets that we were mining. Also in 2015, we started to accept appreciated digital assets into the Fidelity Charitable Program. So that's a tax-efficient way for donors to gift assets, and then they would be divested by Fidelity Charitable and then directed at the donor's request. Again, handling client assets, it's an extremely important function, and so it was really important for us that was handled in a safe and secure manner. And back then, there just wasn't the institutional grade custody solution that we would require. So a lot of research energy and capital poured into what that should look like, and effectively we were spun out of that research group, and it was really just operationalizing and industrializing those processes and that learning.
Right, so it was kind of ingrained in the firm for longer than even it might appear.
Yeah, that's right. And you look back, I think one of the sort of really differentiating factors for us is just the support that we've had from the top of the house. So Abigail Johnson, the chairperson and CEO of Fidelity, has really been very, very engaged with this from a very early stage. And we were just talking beforehand. Abby was a keynote speaker at Consensus in May 2017 when the price of Bitcoin was $1,500. And so we're just incredibly early in that sense, and had a view that this really was transformational technology at a very early stage.
Yeah.
And so that support from the very top of the house has really enabled us to innovate and to move quickly where it perhaps has been more difficult elsewhere.
Yeah. So, Matthew, what's your experience here? Because you don't get much more suited and booted than Goldman Sachs. How do you cope with this? Do you have like a basement of flip-flop wearing kind of crazy
Well, I guess
hair,
you had
crypto?
a foretaste with kind of Marcus, kind of our neobank. So they kind of had the bean cushions and what have you. I think what's kind of interesting about my team, I'm significantly older than the next. And so, generationally, they have kind of grown up, and really embraced. And that's kind of how we built the team, to be honest. And actually a really interesting soundbite, and I'd be interested to see kind of what the results are, but we had to do an attestation at the end of the year, how much do you invest in crypto, and then B, as an individual, do you have over X amount? And I think when the results come through, the firm will be kind of surprised actually how many people do invest and trade.
Right.
So I don't think so. I think, that it's interesting because, we're starting to see, sadly, some of, our talented kind of staff move to many of these different firms, and, kind of coming to join the team, is kind of one of the things that, is an alternative. And so we've been able to pick up some really good talent from across the bank.
But there's a good slice of crypto people who think that Goldman Sachs is an outdated institution that we don't need anymore, and banking is for boomers. How do you kind of attract staff in that situation, and how do you filter potential staff to make sure you've got the people you want?
I mean, look, it's a good question, and I think you need a balance. Certainly to the team I've got, that people who have really grown up and are very and really embrace the kind of crypto and DeFi and really understand, and particularly on the engineering side. And I'd say on the business side, you can actually kind of, I would say, hire people who do have structured finance experience. Some of the strats have just got a phenomenal kind of insight intellectually into this space, and so I think you actually have talent that can really kind of add huge amounts to the business. I think the thirst for engineering talent is kind of quite acute, and you see Coinbase kind of hiring kind of 1,000 each quarter, and so that's more difficult. But I think for me, it's kind of giving the engineering team and the business side the opportunity to really embrace the opportunity set across crypto and the digital asset marketplace. And going to the point that Chris made, one of the things I've been very fortunate is that top-down support. 2 years ago, the firm was kind of probably dipping its toes, but given clients' interest and just the support from, the executive office down, we've been able to build a very talented team.
Yeah. So, Nicola, you are ex-Citadel Securities, right? So, when did you drink the Kool-Aid? I mean, like, what made you kind of get into this, and was it a big step change into this industry?
Yeah, so I think, one of the reasons that I was initially attracted to crypto was, the combination of the technology and the innovation we're seeing in the technology space, coupled with, the trading aspect, right? And it's something that at Citadel was really focused on, but then, the interest rate markets weren't really innovating at all. They weren't really changing. I mean, we were just talking about Gensler and what he wants to do in the treasury space. But,
it's a really slow-moving beast.
It's a very slow-moving bus to be on. And so started looking at the crypto space. And the one thing that was a little bit mind-boggling to me coming from the traditional finance space was that every counterpart that I was talking to didn't believe in regulation, didn't believe it was coming to the space, wasn't sure that it was something that they wanted to support and move forward. And for me, I wanted to join a firm that was really committed to, increasing the safety of the ecosystem, making sure that we were pushing forward, that we were servicing institutional customers in a way that was safe and secure.
Yeah.
And so I started asking around, I would love to go to a liquidity provider who really believes in regulation. B2C2's name came up time and time again, and I'll say, we continue to push forward into the regulation space. In particular, looking at how do we partner with regulators worldwide to make sure that not only are they educated in the space and they know what's going on, but we're making the space safe and secure for our customers, whether they're trading spot crypto or whether they're trading a traditional derivative. And to your hiring point, one of the things that when I came over, I was like, oh, am I leaving 20 years of institutional knowledge behind on the table and moving to this world that I don't really haven't really immersed myself in. But more and more you're seeing the two worlds collide, and if anything, focused on derivative regulation, focused on how we get people access to the space without maybe them not being ready to dive into having to deal with the blockchain right now. And that's why you're seeing things like options and NDFs come to the forefront of the conversation.
Yeah.
I actually think the point about regulators is a really good one, because I mean, in prior jobs and businesses that I've run at the firm, the interaction with the regulators has been really few and far between. But I think now it's a lot more kind of symbiotic, and there's a real kind of thirst on their side to learn more and understand the rationale for why we're kind of focused on different aspects of this market. They're learning, and similarly, it helps us kind of understand, kind of how regulations can be kind of conducive. And I think, I'm not as skeptical as Patrick, in terms of the UK's announcement. And I actually think, they're putting forward, the potential to operate in a sandbox. I think that could be very powerful if constructed right.
Yeah. But that's the issue, isn't it? You've got to have that relationship with the regulators, or the whole thing falls apart. I mean, exactly on that point, how do you not annoy the regulators?
Yeah, I mean, we definitely take a very different approach to that of some tech companies, clearly. I think that one of the interesting things is it is a slightly unlevel playing field. I mean, we are fundamentally unwilling to operate where there's not perfect regulatory clarity. And that means that, in certain jurisdictions, we can be, quite heavily restricted in the services that we can provide. And the competition that we face are less concerned, would rather operate in the gray zone and then take a small fine at some future point. And so it is, somewhat a source of frustration that it feels like we're operating on an unlevel playing field. But yeah, to answer your question, we try as hard as we can not to annoy our regulators.
I think we might need you to pass the mic.
I think mine works actually, doesn't it?
Yeah.
Katie, I think Katie's
Why don't you take the same question, Nicola,
around regulators?
Yeah,
sure. Happy to. So, for us, agreed. We can't work in this world where we're kind of in the gray zone. We like to talk in the black and white zone. So for us, it's really, can we take a higher standard, right? So in the U.S., we were one of the first firms to offer loans as a private placement under a 506B exemption. So, we're always going to look to make sure that we're operating in a space where the regulators are going to be happy with what we're doing. And also for our customers, right? We never want to put our customers in an awkward position. So, that really means, taking the higher standard at all point in times and asking questions, right? Asking the regulators how they're thinking about it. And, I think on the back of that, we've stayed on the right side of regulation in the U.S.
Yeah. I mean, if you could just pass the mic.
Yep.
Sorry, we're having a few mic issues. It's quite lively in the bar for such an early hour, I would say. Yeah. Don't know if you can keep it down a bit in there. But, I mean, it's a similar situation with Goldman, right? You don't want to, exactly to Chris's, like Chris was saying, you don't want to kind of break things first and apologize afterwards. You want to make sure you're doing everything by the book in the first place. What does that process look like, and how sensitive are you to regulatory and reputational risk?
Yeah, no, look, I don't think it's any different from any other kind of asset class, quite frankly. Just that the dialogue's just a lot more frequent. Because everything we look to do in any aspect of, be it the tokenization, crypto trading, we would have to notify the regulator. So it really is kind of like, just like I said, a bilateral discussion that we're regularly having. I mean, just kind of taking a step back, I think one of the points Chris made around kind of a level playing field is definitely something we feel quite acutely. So we are very heavily regulated, everyone knows that. But if we want to be competitive with the likes of Coinbase and others, it's really important for us that we can at least have some kind of equivalence. And so while we obviously naturally embrace regulation, it'd be just nice to see that there is a bit more of a level playing field. But going back to the point, I think that dialogue does help kind of the regulators understand the rationale for what we're doing, actually gets them closer to the risks, and then really kind of helps them formulate their view and hopefully become a little bit more friendly, I guess.
So, Nicola, like we say, you in a previous life you were at Citadel Securities. You must know trading inefficiencies when you see them with that kind of background. Where are the inefficiencies in crypto trading now, or what could crypto trading teach traditional finance in terms of how to get stuff done?
Yeah, so I think, in terms of what, I'll start with the easy question, which is what can crypto teach traditional finance? I think innovation is one of those things, right? I think how quickly you've seen the crypto markets innovate, not only within, what I will call the crypto native space, but also in the pushing into the traditional space. 24/7 trading is something that, I think if you think about it, if you're at a bank, you close your books at 5:30, you probably have 2 or 3 hours before you're open and trading again. Like that's just inefficient for your client base. If there's something that happens in those 2 or 3 hours, you can't get access to liquidity. So I think, there's a lot of work that goes into running a system 24/7, 365. Our tech team and our quant dev team spend a lot of time focused.
Hand on heart, do you think that is coming to the rest of the market?
Sorry, can you say that?
Hand on heart, do you really think that model, that 24/7 model, is coming to currencies, equities, all the rest of it?
I do. I mean, we launched fiat trading 24/7 in June of last year, and it has been one of the things that we've seen just clients be so thankful that we're making markets on the weekends in those fiat pairs. And so like that's kind of the first place that we pushed into 24/7 in the traditional space, right? Always being in the crypto space, but I do think that that's coming. And then something as simple as, everyone always talks about are the crypto markets as safe and secure as traditional finance? Well, the fact that you can monitor every transaction on the blockchain, you can see what exposure you have, is something that I think, traditional finance would also benefit from, right? Is that transparency and that visibility and not being so constrained by the banking model.
Yeah, I would agree with all that. And actually, one of the transactions we recently did was extending credit collateralized on Bitcoin. And the reason for that was I wanted the psyche of the firm to get used to the 24/7. 365-day risk management. It's very small, but it's a real big mind shift change. And so, to your point, having the system set up, the risk management in place to follow that around the globe is not, kind of some small endeavor. It's quite big. So I definitely see it happening. Probably take a bit of time more across kind of many other asset classes, but I definitely do see it as the future.
I mean, it's interesting because crypto really just sits at the nexus between technology and finance. And I think obviously this was, you look at the sort of first movers and they were largely technology companies and they were ran like technology companies. So it was, and I think there was a little bit too much of let's throw out sort of 300 years of financial history and just rewrite the book. And now what we're starting to see is some of that sort of scaled back. But it definitely has led to this mindset of innovation and pushing boundaries. And I think that will bleed into traditional finance as traditional finance comes into this space.
I mean, do you think that will mean that intermediaries in the crypto market kind of, for want of a better phrase, kind of grow up a bit in terms of being a bit more transparent about who they are, where they're based, how they're audited? There does seem to be a bit of a need for a bit more of an upfront relationship with regulators. I think over time they will start to look more like Fidelity and Goldman Sachs than they do like kind of, flighty crypto startups.
I would say if you're operating in the institutional space today, you already have that bar that you have to reach. Like all the clients that we're talking to, it's the same KYC, AML, policies and procedures that you see in traditional finance. And actually there's a lot of need for more onshore presence, right? We making sure that you're in regulated environments so that your clients can do business with you.
Yeah.
I mean, part of this is driven by regulation itself. I mean, a lot of activities in Europe and the UK just aren't regulated activities right now. I mean, in the UK, the custody of crypto assets is not currently regulated activity. You need to be registered with the FCA as a crypto asset business, but the activity of custody is not regulated activity, nor is it in Europe. And so that needs to change, and that will provide oversight, in terms of operational controls, in terms of security, so on and so forth. And that will help stamp out the presence of bad actors and just elevate the industry at a whole. I think the other thing is then sort of putting in place appropriate regulation to ensure that we don't have, to your point, exchanges that play regulatory arbitrage, incorporate themselves in island nations, and then provide services globally. Like, that type of thing needs to be stamped out through regulation also.
And the other thing I would say is we've talked a lot about, the trading side of things, but equally as important to your point, the settlement side of things, the custody side of things, it's by far the biggest defining factor in the market, and it's something that, we spend a lot of time educating customers on because it's just one of those things that, it's so different from the traditional finance markets, right? If you're at a bank and you send money to, an invalid address, or, you'll call up whoever you sent it to and be like, can I please have my money back? And they'll send it back to you. If that happens in the crypto space, for most likely those are gone. So there needs to be a lot of regulation and setup and infrastructure around that whole settlement piece.
Yeah, I think that's right. And I think, one of the things when I took over the job that people within the firm are very concerned about is that changed risk profile from a custody perspective. Because today, obviously, everyone's very familiar and you just don't have that same existential threat. Whereas I think the whole digital custody has evolved quite significantly over the last 2 or 3 years. And it's definitely got to a place where I think, organizations like ours can just get an awful lot more comfortable. Plus, there's a lot more competition. You've seen a lot of TradFis enter the space, white labeling some really kind of cool technology. Plus, obviously, there's an existing kind of crypto incumbent.
Sorry. As you say, there's a lot more competition in the space, but the Bitcoin price itself has kind of leveled out somewhat. Is this the early stage of actually a loss of momentum in the asset class, or do you think this is just kind of, you're going to say no, but I'm going to ask you anyway. I mean, I'll put that to Chris since he's looking at me.
Sure. Yeah. No. I mean, I would say definitely not. I think arguably the pace of development and activity has never been faster, and so. Fundamentally, the crypto markets are inherently volatile. We have seen a high degree of cyclicality in the past. Traditionally, if you follow the halving cycle, we're in the middle of bear market territory right now. And I think we're seeing just a natural softening in interest associated with that. Like, I think or let's say softening in price action. I think that as I say, the level of activity, the level of interest, the types of conversations that we're having with clients who are seeking our products and services has never been of a higher quality and never in higher volume. And I think that, this rebrand that crypto went through in the second half of last year, now people don't talk about crypto as much as they talk about Web3, the metaverse, creator economies. I think that really solidified the investment thesis and sort of more completely articulated what all this is about. And in fairness, I don't think the crypto community 5 years ago would have been able to articulate, so this is that exact thesis 5 years ago. I think that this is a sort of shifting narrative, but I think it's been transformational in terms of how people view the asset class at large, I would say.
Yeah, and probably, the two things I would say. Firstly, there is so much kind of VC money that's been pumped into this space, to your point, and I think that has given huge war chests. So regardless of kind of what Bitcoin does, people will continue to innovate and invest. And I think that's probably different from a couple of years ago. And the other thing I see is, when I talk to pension funds, you talk to insurers, is the number of these entities that actually now have their own digital asset teams. They may be small, but they're really thinking through what they can do to transform their businesses, as I mentioned earlier. And I think that's quite transformational because you've got a huge swathe of the market now focused on that technology. And, at the heart of this nexus with crypto that you talked about, that interplays. And so I really don't think that, like I say, Bitcoin kind of going down 20% is either here nor there. I think the other point is the maturity of the market. You're starting to see, as also mentioned earlier, just a maturing of the trading products on offer, which means that people can trade the volatility like they can any other financial instrument. And so that becomes exciting and creates a huge amount of opportunity as well.
Yeah, the one thing I would say, and I think it means for the space, is that you need to be more sophisticated in your trading algorithms, right? You can no longer just have a natural long bias, which is historically what most people have done. So you're getting into sophisticated trading algorithms, making sure you can trade the volatility, making sure that you continue to settle through the volatility. And so if anything, we think it'll make the ecosystem just a better place. Once we kind of have a little bit of back and forth.
It will make you stronger. Yeah, but what have you
stronger
seen?
And better.
What have you seen in terms of volumes lately?
For us, we've actually had a great first quarter. I think there's been a lot of talk in the market about volumes being down. If anything, I would say we've seen a massive shift from exchange to OTC. And I think to the point about institutions getting into the space and more traditional finance institutions getting into the space, that's OTC is a natural place for them to trade. They don't want to trade across, hundreds of exchanges to get access to liquidity. They want to go to one source, be able to trade in large size, make sure that it doesn't severely impact the market. And so we definitely feel like there's this shift from exchange to OTC, especially it's been exaggerated in the first quarter.
Yeah, yeah. But, to play devil's advocate a bit, what happens if, there's already been a big pullback this year in speculative assets in traditional markets. What if the Fed does do like 75 basis point hikes and all of the air comes out of anything that's, remotely tech-tinged? Just can crypto really make it through that sort of environment?
Yeah, well, personally, I think that, just like we saw in the pandemic crash, will there be if there's a massive risk-off move, will crypto follow? Yes, absolutely. Does that mean that it's the death of the market, which people have been calling for the last 13 years? No, it's just like another, it's price action and doesn't accurately reflect underlying development activity. And so I think we need to sort of separate these two things.
Yeah, I was going to say, I think you do need to delineate a little bit, because I guess your question is very much geared towards Bitcoin, but actually when you look at a lot of the other cryptocurrencies, the value is based on, the applications that are built on the actual blockchain. And to the point about the metaverse, Web3, NFTs, you continue to see a huge amount of investment that just really isn't linked to kind of Bitcoin's performance.
And I don't think it matters whether it's crypto or, the traditional markets. In a rate hiking environment, you're going to need to make sure that your interest rate risk is modeled correctly. And it's one of those things that probably a lot of people that are trading at these firms haven't seen in their entire trading career. So I think that's the thing we're more worried about is what does that mean, and how are people going to have they accurately modeled it into their risk and models, and what's that going to mean for the market? But I think it's whether it's crypto or traditional finance, you have that risk.
I mean, how do you model it, though, when the industry itself still can't really decide whether this is a currency or a speculative asset?
Well, I mean, in derivatives, there is an interest rate component, so I think that's more what we're concerned about. But you're right, like depending on the day, it might trade like an equity, it might trade like a commodity.
Exactly.
Yeah.
I exactly agree, but I still think you need to delineate the two, because I don't think, kind of Avalanche or Avas trades in the same way that Bitcoin does. Again, it goes down to the fundamentals of what's been developed, and you could argue the same with ETH, although there's probably a few more dynamics there.
And you can see that just in the constituent within the top 10. I mean, 5 years ago, what was in the top 10? Sure, you had Bitcoin and Ethereum, and then it was like XRP, Bitcoin Cash, Zcash, Monero, Litecoin. These things were all vying for that store value medium of exchange top spot. Now, what we've seen sort of 5 years on is that really Bitcoin's the only show in town from a sort of store value medium of exchange perspective. Yeah. And then everything else in the top, now we have a lot of, it's Solana, it's Matic, it's, exactly. Different layer ones that are trying to achieve different things. And so, I think probably one of the worst things that happened to crypto was that somebody called it cryptocurrency. But so we tend to use the word crypto asset, and really I think of, and this is perhaps sort of leading into my former life as a commodities trader, I tend to think of crypto really more as digital commodities. Bitcoin is digital gold, Ethereum is almost like digital oil. You shouldn't hold it as an asset itself, or with this level of immaturity that could still work. But really, even when you look at sort of how those calculations are determined, they talk about, it's measured in gas and so on and so forth. So it's really a utility commodity.
But how helpful is it that pretty much every 5 minutes a new cryptocurrency comes along? Do we need some sort of tighter oversight around which of these currencies end up getting traded on exchanges? Doesn't it sort of muddies the water for the whole asset class, right?
I think I think it's a fair point. I think it's unfortunate, and you have a lot of people who have a huge amount of wealth has been generated over the last 13 years, and there will always be people who look to cash in on this. I think that there's anybody could fork Bitcoin. How much, but we're now really at the sort of point where the network effects of an asset like Bitcoin are so deeply entrenched that it's almost impossible to unsee, even if a sort of better technology comes across. And that's like one of the typical sort of criticisms is, well, nobody uses Ask Jeeves anymore. Yeah, sure. But, that's a user experience and doesn't rely on network effects in order to establish its value. And so I think that, yes, it's easy to create a new coin. It's easy to go to a company's house and set up a new company. That doesn't mean that it's necessarily going to, it's going to accrue billions of dollars in the fullness of time either.
Yeah, and I think if you think about the stock market, right, you clearly have your your gold standard of stocks, or your S&P 500, and then you have all of your penny stocks, right? If you're trading a penny stock, you should know what you're getting yourself into. If you're trading kind of one of the large, if you look at 24-hour volume, top 50, you pretty much know what you're getting yourself into. Whereas once you start getting into blockchains that are untested, and especially, DeFi is this space that I think hasn't really, it's not really figured out what it wants to be yet. And there's a lot of concerns, right? We've seen two hacks over the last, N number of weeks. If you're playing in that space, you have to know what you're getting yourself into, because it is not at the point where it is safe and secure yet.
So where are the limits in terms of the activity that you will get into? Do you quite often have opportunities that come up for businesses that you could effectively get into where you just say, no, it's not ready yet? Is it around things like that, like the maturity of the blockchain, or is it around individuals? How do you choose the people and the institutions that you're prepared to work with?
I mean, at least from the coin side of things, we have a very rigorous, what coins or crypto assets are we going to list? It's everything from how secure do we think the blockchain is, can we transaction monitor? Because if you can't transaction monitor, you're exposing yourself to risk that you might not want to deal with. And then from a regulatory point of view, right? I mean, being sat in the US, I will tell you that there's not a lot of clarity on what is a security and what isn't. So going out and seeking external counsel and opinion on does it rise to the level of a security? Are you putting the firm at risk by trading this coin? Is something that we spend a lot of time thinking about. And so I think it's just being really rigorous with what you're trading and what you're getting involved with.
Yeah. I mean, same to you, Chris. You got to be choosy, right? How do you do that?
Yeah, so right now we're Bitcoin only, but we're transitioning to a multi-asset support model later this year. And so we have, in designing what that governance framework should look like in terms of accepting new assets onto platform, we're going to be pretty strict. And we're never going to list 1,000 coins. That's just not who we are or what we do. And so there are easy things to strip out, like anything that has any privacy capability. That isn't really a use case or doesn't serve a use case that we fundamentally believe in. And then there's questions as to, what is the developer activity? Is this a meme coin? And we're unlikely to provide support for things where there is a low amount of developer activity, or it's and the other thing to mention is just how new is this? Is the hack risk, code risk? Does it pose an issue to us as a custodian, or does it pose an issue to our clients to engage in trading of these assets? So all of those factors will come together and form that governance process when it comes to accepting new coins onto platform.
I'd say naturally we're not going to be at the cutting edge of this space, but certainly from a derivative perspective, we're led by kind of what we can trade in futures. And so actually the CME's kind of recent announcement that it's got another 11 reference rates, or referencing kind of another 11 cryptocurrencies, I think is hugely helpful if you think that that's ultimately going to kind of materialize in kind of 11 more futures.
Now we've got 10 minutes for questions, and we've got 10 minutes left. Anyone in the audience like to ask any searing questions? If not, I have some up my sleeve. Would anyone like to wave their hand in the air? There's one person waving their hand in the air at the front, but I think you might need my mic. Thank you. Oh.
Hi there. Thank you for letting me ask a question. I'm Michael Borelli. I just had a question. Do you think the industry is at on the maturity level or maturity scale? Do you think it's ready to take that next step? And what do you to get institutional adoption? What do you think are the main barriers to institutional adoption at the moment?
Okay, if anyone didn't hear that, that was what do you think are the main barriers to institutional adoption at this point? Thank you.
Yeah, so I could probably start on this. So every year Fidelity conducts what we call the Institutional Investor Study. So we commission Greenwich Associates on our behalf to survey a really broad swath of investors. And so we started off just doing this in the US. We expanded it to Europe in year 2. And then last year we expanded it to 8 of the larger Asian economies. And, so now we're just starting to get some, very basic trend data. And interestingly enough, everything associated with infrastructure security, hacking, custody, those are declining in terms of relevance to investors. When we ask the question, what is the single largest obstacle for you as an investor to make an allocation? The one thing that has actually increased in relevance over the last few years is volatility. And to be clear, I don't think anybody's worried about, upside vol. People aren't really too concerned about making too much money, but they're concerned about the downside vol. And clearly, we have seen very significant, drawdowns, in certain coin. Bitcoin has come off 90% in its short career a number of times. And so that remains to be a very significant obstacle.
I mean, I can answer that.
No, go ahead.
I can answer it slightly differently from a digital asset perspective. I kind of concur with what Chris said on the crypto side. But I mean, as we start to look at kind of digitizing different financial instruments, the kind of inflow, the inbound from our client base has been kind of remarkable, in part because some of the things that we've kind of publicized, that we've worked on with others. And that, again, is across kind of, largely the institutional kind of landscape. Now, I guess the two key constraints, really, one is continued regulatory clarity. I mean, we talk about DeFi a little bit. I mean, we see some really interesting opportunities, maybe in a regulated DeFi kind of space. But again, you have to do that in a sandbox. But just even taking a step back and thinking about, can we do tokenization out of real estate, for example? People love to be involved. Lots of issuers super interested in that. Key thing really from the investor side is liquidity. And so it's then thinking about kind of, are you going to be transacting, say, on Ethereum, which has complexities for us as a bank holding company, or is that going to be on a private DLT? So I do think that there is a huge amount of interest and eagerness to get actively involved. Asset managers, like I said, kind of insurers, and naturally hedge funds. So I think it will happen. I think the regulatory kind of landscape, which is becoming clearer and clearer, as we've talked about, I think is becoming more helpful.
Yeah, and I would say derivatives, have really allowed access to the space. So when I joined, of the clients that we were onboarding, maybe 10 to 15% were traditional finance, and now we're seeing upwards of 50% in any onboarding at any period of time can be traditional finance. And I think that the shift there is really access to derivatives. So trading options, trading NDFs, and getting clients access to those type of products that they're more familiar with. Their risk managers know how to model them. It's something that they currently trade in kind of the fiat space, has really been a game changer for the industry and allowed those traditional finance players access.
Totally agree.
Any more questions? Oh my God, there's loads of hands now.
Hi, great panel. So my question is regarding the UK government's desire to be a central figure or a leading figure in the crypto space. Do you think the UK can cover the ground that, for example, Dubai and Singapore has covered over the last several years in being a leader in this space?
So for anyone who didn't hear the question, do you think the UK government's greater focus on crypto now really can change the game here?
Very good question. My personal view is yes, but I guess their words have got to, lead to deed. And I think, Singapore, you can say the same about Switzerland as well, and obviously the Middle East have been very forward-leaning, but I think the UK has a unique spot. For obvious reasons. And so, listening to kind of what they talked about, and there was a very broad kind of ambition there. So to the extent that moves forward quickly, yeah, I'd be very excited about what they could do.
Yeah, I would just add to that. I think that the proof is in the pudding. We've just come out of a very complex period of registration under EU5 MLD. And it's great to see the UK is now leaning into the space and wants to see itself as and wants the UK to become a crypto hub. I think there's the facts aren't known as to what exactly the proposals are. If we go down the route of bringing more activity under the purview of regulators, I think that's going to be a very positive step in the right direction.
Complex process was a very diplomatic way of putting it. Well done. What other questions for the audience?
Thank you so much. I'm from Nifty Gateway. It's an NFT platform owned by Gemini. I'm curious if there's been any sort of institutional interest or like appetite in investing in NFTs. That's like an asset class that I don't think has been touched on in the panel so far. Thank you.
Great question. If anyone didn't hear it, what kind of institutional interest is there in NFTs?
I can start off. I mean, I think probably more from our private wealth part of the business, to be fair. I mean, there's definitely an awful lot of interest. And more actually, kind of the questions more emanate: can they generate leverage, as opposed to can we, offer the ability to custody and things like that. So definitely interest there. Probably less so from the institutions, to be fair, thus far.
Yeah, I would agree with that. It's not something that has come up in conversation, although it is a very new space, and so I think that could develop in the fullness of time. But it's not something that we have many clients asking us about at this point.
But I mean, Chris, in the US, Fidelity is working on getting Bitcoin into 401ks. Is it only a matter of time before we have some bored apes in some?
No comment.
Fair enough. Nicola?
Yeah, I mean, we haven't seen a ton of institutional requests for NFTs, but I mean, the space is innovating so quickly, it's probably only a matter of time. But we're really driven by what our customers are looking to trade, and up until this point, it's primarily been derivatives and spot.
Only one other thing I would mention is we are actually exploring NFTs in the context of financial instruments. And actually there, the power is actually quite powerful. So we work on a number of different things, but a slightly different context, I guess, to your question.
Actually, if I could ask sorry to role reverse here, but I was going to ask a question to Nicola, if that's okay. We've obviously seen a number of market makers start market making in NFTs and, sort of assessing what the, what the floor price should be, trying to find aberrations in pricing and try and provide professional liquidity to those marketplaces. Is that something that B2C2 is looking at?
It's not at this point. I think it's a very niche skill set. I mean, I almost compare it like to a Sotheby's and you're trading in art. And so if and when it makes sense, we'll probably we could get involved. But I think at this point it's just bifurcating capital, getting into kind of one-off trades is not. We're really focused on increasing liquidity in kind of the biggest and broadest coins and digital assets right now. But I won't take it off the table yet.
Never say never. Just to quickly follow up with Matthew. So in terms of NFTs leaking into traditional markets, do you think we might end up with some sort of model with like NFTs of listed stocks, effectively, some kind of hybrid?
I mean, possibly. I mean, we're thinking more about it in the tokenization of kind of real assets, to be fair, but yeah, it's not inconceivable.
This time next year, I mean, who knows, yeah.
But more on the private side, I would say.
Got time for one more very, very quick question.
So my question actually refers to tokenization of real-world assets. So kind of to flip the coin a little bit of institutions buying native crypto assets. What about tokenization and digitization of existing assets? How are institutions and institutional investors entering the space? What do you think the timeline is for things like this? And how do the conversations look in that regard? Thank you.
You have 10 seconds.
Yeah, I mean, just quickly, we would say it's definitely something we're having multiple conversations with multiple different companies about. From a bringing technology into the space, It makes a ton of sense. Best guess on timing, I would say later end of this year, early next year would be my best guess.
We are bang out of time.
There you go.
I'm sorry, we're going to have to leave it there. Can you all please join me in thanking our excellent panelists for sharing their thoughts here this evening? So, just really quickly, we're going to move on to our next session really quickly. We're very happy to be talking to Charles Hoskinson, who's the co-founder of Cardano and Ethereum. This being a crypto event, the last-minute curveball on this is that he's going to be speaking to us from his private jet. And so we're only going to be able to hear him and not see him. We have mocked up a picture of what he might look like on his jet, I believe. We might be able to see that soon. But he's such an interesting character in this industry, such an influential figure. We're really delighted to hear what he's got to say. My colleague Eva Saleh will be asking him the questions. But again, thank you so much to the panelists for giving up their time this evening. Thank you.